Hello, good morning, and welcome to this MEED live webinar on the oil and gas projects market in the MENA region for the 2025-2026 period. Thank you for tuning in for this live session from whichever part of the world you are doing so from. My name is Indrajit Sen, and I have the absolute pleasure of welcoming you as your host for today's webinar. Some of you attending today might know me personally already, but just as a way of introduction, I am the editor for oil and gas at MEED. I have spent more than a decade covering the regional oil and gas industry, out of which about 7.5 years have been with MEED here in the Dubai office. So over the next hour or so, I will try to provide a summary of the MENA oil, gas and petrochemicals projects market, offer a glimpse of the main mega projects, including project programs, analyze active contracts and spending to date, and highlight key contracts to be tendered and awarded over the next 18 months or so. Right. Can we go to the next slide, please? Right. Before we begin, let me talk a bit about MEED and what we do. So essentially, we are owned by London-based Global Data PLC. MEED was established about 66 years ago, or 67 rather, in 1957. And we have been covering and tracking projects across oil and gas, construction, transport, power and water, infrastructure, and you name it, all the major critical sectors that are really key to this part of the world. And just to clarify for today's webinar that MEED's definition of the oil and gas industry covers projects that are in the main hydrocarbon supply chain, starting from when the oil and gas molecule is extracted from the ground or the bed of the sea. So that's upstream essentially, to when it is transported through pipelines or stored in giant caverns or storage terminals. That is your midstream sector. Till when it is fed into crude refineries or gas processing plants for further processing into downstream products. So that's your downstream sector, and also the petrochemical sector, where we see those crude molecules or gas molecules fed into giant petrochemical complex for conversion into high-value chemicals. And also more recently, over the last 3 or 4 years, we've, with the energy transition gathering more pace in the MENA region, we've started covering the use of hydrocarbon molecules for the production of blue hydrogen or low carbon hydrogen and low carbon ammonia. Any form of energy, might I add, that is not produced from the hydrocarbon molecule is not included in the oil and gas coverage at MEED, but we have a different editor for the power and water and the green hydrogen and green ammonia sectors. Right. Now, of course, today's webinar coincides with the launch of our new comprehensive report on the MENA oil and gas market for the 2025-26 period. Let me mention that it is an exhaustive research work on the oil, gas, and petrochemicals market in the MENA region, prepared by a team of analysts who are based out here in the Dubai office, as well as primarily in our office in India. So do make sure to grab a copy of this report to help yourself understand the project's landscape over the next 12 to 18 months, the direction and focus of client investments, and to be able to, of course, make informed decisions. And of course, if you purchase using the code that you see on your screen right now, that's a special discount that we're offering alongside today's webinar. You get an additional $600 discount, so be sure to take advantage of that. Right. And before I dive into the main body of the presentation, might I also add that a copy of this entire presentation, along with a recording of the webinar, will be shared with all registered attendees for this webinar. So do not worry if you miss out on the live streaming of this webinar. It will be delivered to your inbox straight after the session is over. Right. And also, the Q&A dialog box is open, so do feel free to shoot in your questions as and when it comes to your mind, and I shall try my best to tackle most, if not all of them, throughout the course of this session. Right, what a time to be discussing the oil and gas projects and investments. The regional industry is going through unprecedented times, There is pressure from oil price cycles, of course, resulting from regional wars, geopolitical conflicts. We've seen it virtually all this year, starting from the Israel-Gaza war to the regional conflicts between Iran and Israel, through to the really tumultuous few weeks that we saw affecting oil supplies in the Strait of Hormuz. And so, yeah, I mean, really, there has been a lot of disturbance in the oil market, and that has had a clear impact on prices. I think the last time I checked this morning, oil was trading at about $70 a barrel. That is Brent crude, of course, a global benchmark. And it has stayed in and around the $70 a barrel mark throughout the course of this 6 to 7 months of 2025. But oil price cycles are not new to the industry, and the MENA oil and gas sector has always been guided by fundamentals and long-term objectives rather than knee-jerk reactions to oil price cycles, as we are well aware. Now, what we see happening this year is subdued spending so far, as someone in the Q&A box quite rightly points out. Yes, Mr. Abdul, I totally agree that project market 2025 is very low, of course. And that's mainly because project operators in the GCC especially, have made historic capital expenditures in the last 2 years. So in 2023 and 2024, as the chart on your screen clearly demonstrates, there has been record spending. That was mainly due to operators accelerating critical projects following the pandemic. So the years between 2019 to 22, those 4 years, you really see sort of low spending on oil and gas projects. Of course, there was severe impact on mobility of people and critical equipment for projects, so that slowed projects that were under execution. Also, contract awards got delayed due to several factors surrounding the COVID-19 pandemic. And then what we saw in 2023 was a real surge in project spending driven by mainly gas projects in the GCC, as well as some of the North African markets like Algeria. There were also projects being awarded in Egypt in that year. And then, of course, there was the Ghasha project that ADNOC awarded in late 2023. That was a historic contract award, the biggest so far that the UAE and ADNOC has ever made. We will talk about some of those projects in a bit more detail later on in the presentation. And then last year almost broke all records. 2024, we can see literally $126,708 million. That's $126.7 billion spent on oil, gas, and petrochemical projects in the MENA region combined. What are we seeing this year? Obviously, some measure of pragmatism, if I'm allowed to put it that way, has returned to the market. You cannot have project operators spending robustly year after year on projects, especially after investments have been made in some of the long-term, big-ticket strategic projects. You cannot be expected to see an even level of spending, year upon year. Now, the region does have a tendency to surprise, of course, as we might have seen in the past. And while we may not be seeing sort of the record spending that we saw in 2023-24, 2025 is not over. Traditionally, contract awards do tend to take place in this part of the world towards the back end of the year. So in the last quarter, activity suddenly tends to pick up. So we may be seeing a repeat of that this year. Again, do not take my word for it, but indications are that the third quarter and the last quarter, the fourth quarter that I mean, might see some prolific spending in the MENA region. And that just does not include the GCC, but also in markets like Iraq, Algeria, Morocco, even Libya, which shouldn't come as a surprise at all. Now, the past has always helped us understand our present and determine our future. So let's take a closer look at how the regional countries have performed over a 10-year period. Rising investment in gas projects in future comes as international oil companies shift their portfolios towards gas production, which is seen as a cleaner alternative to oil. So the turn of this decade, so from 2020 onwards, you can really see gas investments in gas projects rise in the regional countries. That's essentially from the start of 2020. Iran, Qatar, Saudi Arabia, the UAE, Egypt, Iraq, Algeria have all driven gas project spending. The region's oil and gas producers now also see petrochemicals as one of the biggest opportunities to deliver revenue growth over the next 2 decades, with global demand for chemicals expected to grow by 150% by 2040. The region's national oil companies, therefore, are increasing expenditure in petrochemicals as well. And as we have seen with announcements and, of course, project spending in big ticket ethane crackers and mixed feed crackers and naphtha crackers in the last 4 years or so, as is reflected in the country by country spending chart over the last 10 years. Right. Now, if we break it down into segments, and essentially the 2 pie charts on your screen are for MENA oil and gas and chemical projects which are under execution. That's to your left, and the one to your right is project spending in planned projects or in pre-execution stages. What do we see when we compare these 2 pie charts? So the value of gas projects under execution, which is projects for which contracts have been awarded and are in the EPC execution phase, is considerably larger than oil and chemical projects. However, when it comes to planned projects, which is essentially projects in different pre-execution stages, starting from the concept design, pre-feed stages to feed, to main contract pre-qualification, to main contract bidding, right up to the contract award stage. The 3 segments, oil, gas, and chemicals, are set to witness almost an even level of spending, indicating that the emphasis that project operators are placing on all segments of the hydrocarbon value chain. So really going forward, obviously with the energy transition kicking in, investments in oil projects, in upstream oil projects, may witness a certain amount of slump. That is not to mean that investment on oil projects will dry up, but their share will be taken up mainly by the gas and chemical sectors. Right. Now, before I dive into this chart about MENA projects that are under execution, let me try and answer any question that may have come in. There is a question about whether this presentation includes green hydrogen and green ammonia. I think I already mentioned that the oil and gas segment that we cover in MEED does not include anything that has to do with projects that are outside the hydrocarbon value chain. So we do not, but obviously if you go onto MEED.com and MEED projects, you will find all the information that you need on green hydrogen and green ammonia projects. Someone's asking for the presentation. Obviously, like I mentioned, it will be shared with you at the end of this live session, along with the recording of the webinar. Right. This is a chart of the top 20 MENA oil, gas, and petrochemical projects that are under execution. So you can see billions upon billions of dollars worth of projects have been awarded, especially since 2022, although with the exception of the North Field East development by Qatar Energy LNG, which in Qatar's history, I think, is the biggest contract award that was ever done. And that went to a consortium of Toyota and CCC. Sorry, Toyota and Technip, to beg your pardon. So the regional energy producers have spent tens of billions of dollars, especially since the start of this decade, on oil, gas, and output capacity increase projects, with chemicals also being a key area of capital expenditure. So obviously right on top is the South Pass gas field pressure boosting project that was awarded in Iran just last year. Obviously, there are conflicting reports about the actual contract value, but and also information is very difficult to source for projects originating in Iran. mainly due to the lack of credible sources, but from multiple news reports that have been been available about this project suggests that the overall capex figure could be at $20 billion. Then, of course, I spoke about the two phases of Qatar Energy's LNG program. Obviously, I will talk about that in a bit more detail throughout the course of this presentation. Obviously, the North Field East development, which involves 4 LNG trains, and the North Field South development, which features 2 LNG trains. Those contracts were awarded in 2021-23, respectively. I already mentioned about the Ghasha project, which, with the onshore and the offshore project put together, is or was the single largest contract to be ever awarded by ADNOC in its history. In Iraq, there has been a significant contract award in the form of the Al-4 refinery EPC contract that was worth $8 billion in 2024. And Iraq really is that rising star of the MENA oil and gas projects market. And we will try and explore why that is the case a little later on. Then, of course, a host of other projects in Iraq and Iran as well. There was also the Ruwais LNG terminal project that was awarded last year, $5.5 billion worth of contract that was awarded to a consortium of 3 contractors. Then, of course, the North Field Production Sustainability Project as well in Qatar. Now, that is a project that essentially supports additional volumes of gas production to be able to support the Qatar Energy LNG program, the North Field East and North Field West projects. You do need additional or prolific volumes of gas to be able to enter the grid so that they can be converted into LNG for export. There was also the Hassi Messaoud refinery that was awarded by Sonatrach in Algeria. That was, again, a significant contract worth $3.7 billion. It was awarded right in the middle of the pandemic in 2020. And of course, Aramco, Saudi Aramco, has consistently maintained a steady volume of spending on the Jafurah unconventional gas program, as we will try and see a little later on in the presentation. Right. Now, here's a list that would interest many of you. This is essentially a ranking of the top MENA oil and gas contractors. And what we essentially see is Asian and European contractors dominate the regional market. We see Technip Energies from France emerging as the top contractor, essentially due to significant contract wins that they have secured over the last 2 to 3 years, essentially since 2022. They have been exceedingly successful in the UAE market, in Qatar, of course, even in Saudi Arabia, as well as other MENA markets. Italian contractor Saipem sits at number 2. They are essentially the largest offshore contractor, definitely in Qatar, and overall in the MENA offshore oil and gas EPC contracts, the contract order backlog, Saipem sits as the largest contractor when it comes to those projects. And what we essentially see is Technip and Saipem eclipsing all others by virtue of a very healthy order backlog that they have secured, like I mentioned, in the last 2 to 3 years. Técnicas Reunidas from Spain sits at number 3. Petropars, I mentioned about the South Pars gas boosting project. Essentially, that has propelled them to 4th position. Obviously, that is highly contested. I do acknowledge that for the reasons that I enumerated a few moments ago. Mer Tecnimont and Larsen & Toubro Energy Hydrocarbon from India, Tecnimont obviously being from Italy. Those 2 contractors are sitting almost neck and neck in that contractor rankings, followed by NMDC Energy from Abu Dhabi. They have been extremely successful in their home market here in Abu Dhabi, across the board with projects from offshore and gas to projects like the Meram project of ADNOC Gas, and then several other in the onshore and offshore space as well. Bunch of Korean and Japanese contractors right in the middle with Hyundai E&C and Samsung E&A, both of whom have seen, especially Samsung, who's seen some recent successes over the last 18 months. The methanol project over here with TAZIZ here in Abu Dhabi, being one of their key contract wins in the last year or so. JGC Corporation sits in the top 10, owing largely due to their contract wins in the LNG space in the region. McDermott, despite from the US, despite all their financial troubles, do also command a healthy order backlog. And then you can see the contractors who are outside the top 10, but obviously doing very, very well for themselves. It's a healthy mix of local contractors like Target Engineering Construction and Gulfar Engineering Contracting from Oman. Target, of course, is owned by the Abu Dhabi government. And then you have the Egyptian contractors like NP and Petrojet, who have won some key considerable contract awards again in this year and in the second half of 2024. Petrofac, which is obviously sort of headquartered in the UK, have been doing well for themselves despite their legal battles and the financial perils that they have been trying to navigate. Subsea 7, if you are an avid and regular reader of MEED.com, you would know that Subsea 7 is in front for 2 to 3 major offshore contract awards that are due to be awarded by Saudi Aramco in the offshore oil and gas EPCI space. So the order backlog does not currently consider those contract awards, which simply because they haven't been issued yet. But if you add about 3 to 4 billion worth of contracts to that order backlog volume, that obviously may propel them to the top 10 list going forward. Right. Now, this is a list of, we spoke about the top 20 projects that are under execution in the MENA region. This is a list of top 20 MENA oil and gas chemical projects, the pre-execution stages. And what you literally see is every major energy company intending to push forward with projects that are deemed critical to their strategic long-term goals in the second half of this decade. Now, right on top is the Nigeria-Morocco gas pipeline. Obviously, this project has changed sort of character over the years. It was announced, I think, at least in 2010, or rather conceptualized. It's obviously a very, very ambitious project, essentially, that involves sourcing gas from Nigeria and the nearby countries, and then transporting that through 14 different countries in West Africa and North Africa, ultimately to be transported to Algeria, and then the final terminal in Morocco, which obviously is going to benefit every country that decides to participate in this pipeline project along the route. And then obviously the ultimate ambition is to pump that gas into European markets, mainly through Spain. Now, obviously, it requires significant amount of project spending. It's billed at $25 billion. There has been news reports about involvement from UAE institutions and banks willing to participate in some of the project spending requirements of this Nigeria-Morocco gas pipeline. And it has gained sort of traction if you look at recent news reports, mainly due to Europe suffering the impact of the Russia-Ukraine war and the suspension of Russian gas supplies to markets like Germany and France. Qatar Energy obviously is considering project investments for the North Field West development, which is the third phase of its mammoth $40 billion worth of LNG expansion program. Although there have been speculation about the future of this project, there hasn't been much movement on the tendering process of this project. It continues to remain in the pre-FEED stage, and we are all eager and anxious to see this project move through the different stages. One reason for that may be because Qatar obviously has significantly increased, or when the 2 phases of the LNG program, North Field East and North Field South, enter the grid, their LNG output capacity would have increased significantly. So there is understood to be some internal debate about the viability, the economic viability of this LNG project. So we will see what happens to the North Field West development. Sonatrach is also moving through the Bled El Hadba phosphate project in the Tebessa region. Again, that's a significant contract award as and when that happens, billed at about $7 billion. In Iraq, the Ministry of Oil is preparing or going through the tendering process for the Nasiriyah integrated refinery package. Now, of course, after that, there are 4 projects that you see, which are Saudi Aramco's petrochemical sector. These 4 projects are understood to comprise the crude oil to chemicals program, the ambitious program that has been in the works since at least, I shall say, since 2016, 2017. Progress has been slow. Obviously, it's a mammoth capital expenditure project that we're talking about. We will look at it at a bit more detail. Of course, there is movement in the Saudi-Kuwait neutral zone with respect to the Dora gas field development. Again, a very geopolitically sensitive project, and the pace at which this project has moved kind of reflects the regional tensions between Saudi Arabia and Kuwait on one hand, and Iran on the other, which contests the claims of the Dora gas field. It even has a different name for it, calls it Arash. But Saudi and Kuwait have shown a level of determination to proceed with the development of this project. There are about 3 offshore packages which are being handled by Al-Khafji Joint Operations, which is a joint venture between Saudi Aramco and Kuwait Gulf Oil Company. So those 3, there are about 3 packages to my mind, and in this project, which are in different stages of tendering. I believe the bids may have been submitted for one of the offshore packages as well. There is, of course, the next package, which is part of the second phase of Qatar Energy LNG's North Field Production Sustainability Program. I briefly described what this project is. We will take a closer look at this project later on. There's been fantastic news from Oman, who have also planned a 4th LNG train to be added to Oman LNG's Kalhat LNG plant, which is near Sur, fairly close to Muscat. That will be the 4th LNG train, again, a significant project in Oman. ADNOC Refining is going through with a project to upgrade and sort of boost capacity of production of naphtha and derive more economic value through conversion to high-value gasoline products. ADNOC Offshore, again, is proceeding with the Saab field development, again, a significant project. A very interesting project from SABIC in Saudi Arabia is the SAN6 low-carbon hydrogen complex. The tendering process is complete, bids have been submitted. MEED has reported over the last few months about this project, and we believe that a front runner has emerged. I'm not going to give out the name. You have to take the trouble of getting on to MEED.com to find out more about this project. But the bigger news is that we do expect a contract award to be made for the SAN6 project by the end of the year, at least. A similar story with the 4th phase of the Jafurah unconventional gas program of Saudi Aramco, sitting at that 19th position. Bids were submitted in the first half of the year, in fact, in March, if memory serves me right. But then obviously there have been back and forth negotiations with the bidders, and obviously now the bids are now valid until the end of August. So we may see a contract to be awarded for this project in the remainder of either this quarter or in the last quarter of this year. Right. Let's play a little game, if we may. And in the form of a poll question, I would ideally like to know Which industry segment do you expect MENA energy producers to spend the most on until the end of 2025 or going into 2026? Do you think it's going to be oil, the conventional spending that has dominated the regional market for times immemorial? Do you think it's going to be gas, which obviously include LNG projects, as we've seen over the last 5 years at least? Or do you think it's going to be petrochemicals and chemicals? Right, I can see answers trickling in already. I'll give it a few more seconds. Right, I think we have a significant sample size on the fact that close to about 300 people have answered this question. I mean, that's a staggering number of participants. So thank you once again for turning up in your numbers. So about 61%, or rather 62% of you believe it's going to be gas, including LNG, followed by 25% who think it's going to be, we are going to see more spending in petrochemicals and chemicals. And about 14% of you believe it's going to be oil that is going to see a flurry of capital expenditure. I have to say I completely agree with the voter turnout. Definitely it's going to be gas that is going to witness a steady stream of investments in the remainder of this year, next year, and definitely until the end of the decade. Thank you very much for those responses. Right. Before I crack on with the presentation, there's just a gentle reminder of a MEED channel being available on WhatsApp. We had gone live with this, I think, about a few months ago, the start of this year. So do make sure to subscribe to this channel for round-the-clock updates about different projects, breaking news, industry updates, delivered straight to your phone. It's very, very helpful, as I've heard from people already using it. Right, now let's take a deeper look at some of the biggest national oil companies and project spenders in the MENA oil and gas market, starting with, of course, Saudi Aramco, the biggest of them all, really, and essentially the biggest company, not just in oil and gas, but across the global economy by any measure. Now, of course, listed on the Saudi exchange since 2019. Saudi Aramco announced a net income of $26 billion for the first quarter of this year, which was a 4.6% decline compared to the same period last year. The Saudi energy giant attributed the drop in year-on-year profit to lower sales and higher operating costs, as well as economic uncertainty that hit crude markets, some of which I alluded to right at the start of the presentation. Aramco's profits in the first quarter may have slid on a year-on-year basis, but that has not impacted the company's capital expenditure, with the company spending $12.5 billion, which was an increase, a year-on-year increase of 15.85%. So despite the drop in profits, spending hasn't decreased by any means. The company had earlier announced a capital investment guidance in the range of $52 billion to $58 billion for this year, for 2025, which excludes, of course, around $4 billion worth of project financing. Aramco has demonstrated robust capex so far this decade on major projects that are critical to its strategic goals of maintaining oil production potential at 12 million barrels a day, raising gas production by 60% by 2030, with 2021 as its baseline, and achieving a liquids to chemicals conversion capacity of 4 million barrels by the end of this decade. Aramco's president and CEO, Mr. Ahmed Nasser, held a conference call with journalists after the first quarter results. I was fortunate to be part of that, during which he said that all forms of energy are key to meeting energy demand as we continue to advance our growth strategy across upstream, downstream, and new energies while working to reduce emissions. He said Aramco's ambition is reflected in milestones already announced in 2025, including progress towards gas production growth target, their global retail expansion. You have seen Aramco investing in retail fuel chains in countries like the Philippines and Pakistan. And also, I think it was Chile or Peru or one of the Latin American countries. I can't quite remember. Forgive me for that. And also, they have been advancing their petrochemical strategy in blue hydrogen and further innovation in carbon capture. So that was coming directly from the president and CEO of the company. It's been a year of surprises from Aramco's offshore spending perspective. There was anxiety that had been growing in Saudi Arabia's offshore market with EPCI contracts drying up. Why was this? What was the reason for this anxiety? Because last year, throughout the whole of 2024, Aramco had spent a record $5 billion on offshore EPCI contracts, and the expectation was that Aramco would easily surpass that level of capital expenditure on offshore CRPO, contract release and purchase orders, this year, since not a single contract award took place in the first 6 months till the end of June, rather. There was sort of speculation growing. However, in July, Aramco dispelled all speculation that this might be a dry year by selecting contractors for 5 CRPOs, which are numbers 150, 157, 158, 159, and 160, which are combined worth more than $3 billion. Now, these tenders involve the EPCI of key structures and modifications and upgrades to infrastructure at the Abu Safa, Berri, Manifa, Marjan, and Zuluf offshore oil and gas fields. These are the sort of fundamental offshore oil fields that Aramco owns in the Gulf waters, and the Saudi energy giant has to spend consistently in maintaining the level of oil output and associated gas output, for which it has to continue to spend on upgrading and boosting infrastructure. Now, furthermore, frontrunners have emerged for 4 more CRPOs, which are numbers 145, 146, 147, and 148. Now, these 4 CRPOs are part of a larger project known as the sort of offshore field development expansion, which are combined, the combined value is estimated to be about $6 billion. You'll find the details of all these contracts, their scope of work, their specific contract values, and of course, the companies that are leading to win these contracts. Obviously, it is important to mention that these contracts have not been officially awarded. However, as and when this happens, which is expected to be within this quarter, or by the end of September, it will sort of lead Aramco to match that level of expectation from right at the start of the year. So it was $5 billion that Aramco spent last year. If you compare that with these 2 sets of CRPOs, as and when they're awarded, that'll take them to $9 billion, an estimated $9 billion, which will mean that they would have doubled the level of capital expenditure on offshore oil and gas projects this year compared to 2024. And what's more, there are at least 8 more CRPOs that LTA contractors are preparing bids for. Of course, not all of them, if not most of them, quite naturally, won't be awarded throughout the course of this year. But you could expect that if bid submissions are taking place throughout this quarter or the early part of the 4th quarter, say in October, there is a healthy chance that at least if a couple of more of those CRPOs get awarded, then that'll be really Aramco doubling their offshore capex level this year compared to 2024. Gas production, that again is a very fundamental sector in Saudi Arabia, and Aramco essentially has been focusing heavily on gas production from its Jafurah unconventional gas field, which is located in the empty quarter of the kingdom, also known as Rub al Khali. That Jafurah basin is estimated to hold about 200 trillion cubic feet of gas in place, and which is spread across 17,000 square kilometers. The Jafurah project, as I mentioned, is a key component of Aramco's long-term gas production strategy. In February of 2020, it received a grant from the Saudi government of about $110 billion to be invested in the long-term phase development of the Jafurah unconventional gas resource base. So that is expected to easily straddle into the 2030s. So that $110 billion estimated capital grant is expected to be spent right up to, say, the 2030s and even up until 2040. Aramco has already spent about $25 billion on 3 development phases of the Jafurah unconventional gas reserve. In July 2024, a consortium of Technigas Trinidas and Sinopec was awarded a $2.24 billion contract to perform EPC works in the 3rd expansion phase. That's the latest contract award that took place within the Jafurah unconventional gas program. I already spoke about this. The 4th Jafurah expansion phase is estimated to be valued at about $2.5 billion. The main scope of work involves pretty much the scope of work on the 3rd phase, which is EPC of 3 gas compression plants, each with a capacity of 200 million cubic feet per day. And I already mentioned this, that bids were submitted in mid-January, sorry, not March, it was mid-January, and are valid till September. So you could expect the contract award to proceed in the last quarter of 2025. Separately, Aramco is also expected to advance with other key projects this year and in 2026 to boost the gas processing potential of its key plants. There is a Chinese contractor that is said to have emerged as a front runner for the Harad gas oil separation plant project. So the processing plants of Harad, Havia, Shedgum, Otmania, Khorsania, these are the major gas processing plants in the kingdom, and Aramco is expected to spend heavily towards sort of increasing the processing potential of these key gas processing plants, which are mainly located in the eastern province of Saudi Arabia, because obviously if you consider the incremental volumes of gas that are going to enter the Saudi Arabia gas grid with the Jafurah, the different phases of the Jafurah projects coming online, you would need your existing plants to be able to handle those volumes of gas that are coming through. So hence, they are investing in upgrading some of these gas processing plants. Like I mentioned, so that's news about the Harad GOSP3 project. Aramco is also progressing with a project to improve the gas compression capacity of the Shedgum and Utmania gas compression plants, and the project is in the main contract pre-qualification stage. Right. Liquids to Chemicals program. Now, like I said, this is almost a decades-old program that has changed shape and form over the last sort of 8 to 9 years, ever since it was announced. What is the core objective of this program? Is to make Saudi Arabia one of the largest petrochemical producers in the world. Aramco, along with SABIC, have been tasked with establishing 10 to 11 large mixed feed crackers by 2030. These petrochemical crackers, which include greenfield developments and expansion of existing facilities, will be built both in Saudi Arabia and in overseas markets. You would have seen public announcements about major petrochemical project investments by Saudi Aramco and SABIC, especially in markets like China and South Korea. That is all part or understood to be part of this mammoth liquids to chemicals program. However, as you can tell from the very sort of definition of the central ambition of this LTC program, the main stakeholders would need to invest a sum of $100 billion. That's a staggering number for Aramco and SABIC to be investing. And obviously, the reason why I mentioned the LTC program has changed in sort of nature and form is because of the cost pressures and the significant overcapacity that sort of already exists in the global chemical sector. So pushing forward with such a capital-intensive program was becoming a little hard to justify. And therefore, as a result of which, Aramco told consultants that they had already appointed for sort of a concept feasibility study that it was last year, that is, MEED had reported on that on the time, that was revisiting its investment strategy and execution approach for the liquids to chemicals program. Now, Aramco may have streamlined the program's remit, which, I mean, the primary goal of which is to attain 4 million barrels per day, conversion of 4 million barrels per day of their crude oil produce into high-value chemicals. The overall goal remains in place. There are 4 main projects. Obviously, there's the conversion of the SASREF refinery in Jubail into an integrated refinery and petrochemicals complex through the addition of a mixed feed cracker. You would have seen, and Aramco has made strides forward with the advancement of these 4 different projects that make up the liquids to chemicals program. So for the SASREF project, for example, they have announced that they are building or financing the building of an ethane cracker that will draw feedstock from the neighboring SASREF refinery. That is a project that is going to go through, as has been announced by the company. The Yanbu Aramco Sinopec Refining Company, or YASREF complex in Yanbu, is also to be converted into an integrated refinery and petrochemicals complex through the addition of a mixed feed cracker. Chinese energy company Sinopec Group is a joint venture partner in the project, so they've done very well in bringing on board a foreign partner to co-invest in the conversion of the YASREF refinery. With regards to the Saudi Aramco Mobil Refinery Company, or SAMREF, again in Yanbu, this also covers converting the SAMREF refinery into an integrated complex through the addition of a mixed feed cracker. Again, Aramco has been successful in bringing on board ExxonMobil as a potential investor. I say potential because it's only a memorandum of understanding that has been signed. There's no firm agreement in place. However, the expectation is that ExxonMobil, already being an existing partner in the SAMREF refining company, will potentially invest in this project. The 4th project within the liquids to chemicals program is the building of a crude oil to chemicals complex in Ras Al Khair in the Eastern Province. This is the only project where progress has seemed to be a bit laggard. Obviously, it is a very cost-intensive project, and also the reliance on technology for converting crude oil directly into petrochemicals and bypassing the entire refining stage is also quite critical. So Aramco is understood to be studying various options to be proceeding with these, by selecting of the ideal license technologies and the right foreign investors to be able to partner on this project so that they can make progress with the COTC project in Ras Al Khair. Interestingly, though, Aramco last year said it had achieved 45% of the target of the liquids to chemicals program. So 45% of the 4 million barrels a day conversion has already been achieved. Also, 53% of Aramco's crude oil production is utilized for the downstream sector. Now, how have they achieved the 45% is what I mentioned a little while ago about also investing in petrochemical projects in overseas markets, mainly China, where the project financing agreement also entails that Aramco would supply, or almost exclusively supply, all the crude oil feedstock that is necessary in setting up the complex. So thereby they secure that crude oil placement into these petrochemical projects. Right, I'm not going to get into the details of this project. Obviously, it's a massive program for which Aramco awarded about $8.8 billion worth of contracts in June last year. I'm talking about the 3rd expansion phase of the master gas system. This project, the 17-odd packages are already well and truly under execution, and they are expected to be commissioned sometime by 2028. You must be quite familiar with the various EPC packages and the overall scope of work on this project. So again, a significant contract award in the gas segment that took place in Saudi Arabia last year. Right, and this is the list of the major planned projects in Saudi Arabia. So we talked about the 4 COTC projects, which are in different stages of planning. So we would consider that following the project financing agreements for the Yanbu, the Yasref and the Samref refinery conversion projects in Yanbu and the Sasref refinery project in Jubail, those would have proceeded into an in-house FEED study at best. I spoke about the Dora gas field development, although that's a Saudi Kuwait neutral zone project. We would like to associate that with a project that is being led by the Aramco side of the joint venture. Already spoke about the San6 project and the phase 4 of the Jafurah program. Obviously, there are tens of other major projects that are due to be awarded between now and the end of 2026. So again, a prolific period of spending in the upstream, midstream, oil and chemical sectors in Saudi Arabia awaits in the next 18 months. Right. Now let's talk about another major national company in the form of Abu Dhabi National Oil Company, ADNOC Group from Abu Dhabi. Started activities in 1971 along with the formation of the UAE. The group today is a diversified energy company with 16 subsidiary companies that are engaged in the production of crude oil and natural gas, refining, gas processing, LNG production, petrochemicals, right all the way to fertilizers. ADNOC's current capacity is about 4 million barrels a day and 10 billion standard cubic feet of gas. And we already talked about their upstream goals, which is achieving an oil production capacity of 5 million barrels a day by 2027, and becoming self-sufficient in gas by the end of this decade. 2023 and 2024 saw record spending by ADNOC Group, and I mean, obviously, all of their subsidiary companies put together. They spent about $33 billion on oil and gas production projects, about 50% of which, or half of which, was dominated by $17 billion worth of contracts that were awarded for the Hail and Ghasha Sour gas production project. ADNOC Group is also trying to achieve a goal of a carbon capture and storage capacity of 10 million tons a year by 2030, and for which they have a budget allocation of $23 billion. It was initially a capital expenditure grant approved by its board of directors of $15 billion, but was eventually raised to $23 billion. What is even more interesting is the launch of their international investment vehicle called XRG, which was created in November last year. And since its formation, XRG, as you would have read in the news over the past few months, that they've invested in stake acquisitions, mainly in gas-producing assets, from all the way from the US to Mozambique, Azerbaijan, Egypt, and Turkmenistan. And more recently in June, XRG announced that it is leading a consortium consisting of Abu Dhabi's ADQ and US investment firm Carlyle, that has made an $18.7 billion all-cash offer to acquire Australian energy company Santos. Obviously, the ambition is in place. ADNOC wants to become a giant in the gas production, processing, and marketing segment globally, and XRG is front and center of leading those programs and those efforts to achieve those ambitions. Offshore projects. ADNOC Offshore has been on the forefront of upstream project spending in the UAE this year, and they've awarded EPC contracts for a project to increase the oil production potential of the Lower Zakum field developments. In February, there was about $7.5 billion worth of contracts that were awarded to Spain's Técnicas Reunidas, NMDC Energy, and Target Engineering for the 3 packages of that Lower Zakum LTDP, the first phase of the Lower Zakum long-term development program. And like I mentioned, ADNOC Offshore is also making progress with another project to raise the oil production potential of the Sata Al Razboot and Lulu fields, which are located in the hydrocarbon concession of the same name. ADNOC Offshore released the main EPC tender for the Saab field development in the first quarter, and contractors are currently preparing bids for that. Now, we recently published news about ADNOC Offshore preparing to start the tendering process for the next expansion phase of the Upper Zakum field development. That's the next phase of expansion of the Upper Zakum field. It is one of the oldest oil-producing fields in the UAE, and the fresh goal is to increase the asset's oil production to 1.5 million barrels per day. And Technip Energies from the French contractor is performing the pre-feed and feed work on the UZ 1.5 MMBD project. Right, TAZIZ. Now, essentially, since creation, TAZIZ has given wings to Abu Dhabi's ambition of really creating a giant, sprawling, high-value chemicals production complex in Ruwais in Abu Dhabi, and several specialty chemicals projects have been earmarked as part of development of the first phase. Fertiglobe, South Korea's GS Energy, and Mitsui & Company from Japan formed a joint venture to develop the first blue ammonia facility in the UAE, which will have a capacity of 1 million tons a year. They awarded that contract to Technimont, the main EPC contract for that blue ammonia project to Technimont, and EPC works are currently progressing. Separately, TAZIZ and Switzerland-based energy company Proman have invested in a methanol project. That shareholder agreement was signed back in January 2023. And like I mentioned earlier, Samsung E&A from South Korea won that estimated $1.7 billion contract just in February this year, with the duration of EPC works lasting 44 months. Wood Group eventually was appointed as the project management consultant on that methanol project. On the other hand, contractors are preparing commercial bids for a project to build a cluster of 3 chemical producing plants, which are ethylene dichloride, chloralkali, and polyvinyl chloride, or PVC, which forms a cluster of 3 chemical plants known as Project SALT. That's the name that's been given to this project. Technical bids were submitted earlier in July. Commercial bids, if I'm not wrong, are due by the 6th of September. Obviously, there is a chance that it might be extended, but that remains the commercial bid submission date as of now. And separately, another major project in the field of low-carbon hydrogen and ammonia has been planned in TAZIZ, something which is called as Project Rabdan. And ADNOC and Fertiglobe had initiated a feed to EPC competition for this project. And as per the latest news that is available to MEED, and also this is based on an interview that I did with the CEO of Fertiglobe, Mr. Ahmed Al-Hoshi, sometime back, is that Fertiglobe and obviously its parent ADNOC expect to reach final investment decision on this project next year in 2026. So by which time we should see some measure of progress being made on Project Rabdan. I already spoke about the Ghasha project at length, so I am not going to go into the details for want of time. But the latest news from this multi-billion-dollar project is that the first loadout of offshore jackets that were fabricated at NMDC Energy's yard in Musafa in Abu Dhabi have been completed, and that took place sometime earlier in July. Obviously, as you know, there are 2 main packages, an offshore package and an onshore package. The offshore package, the EPC works are being executed by NMDC Energy and Saipem, whereas Italian contractor Technimont is performing the EPC works on the onshore package, which also, of course, includes a carbon capture facility. I also alluded to the Ruwais LNG terminal. Again, so I'm not going to go into the details of that. I mainly profiled these projects for you to take a closer look at in your leisure time once this has been delivered to you in your inbox. And there's a quick snapshot of the major planned projects in the UAE. I spoke about the naphtha upgradation project. There is obviously the Shev gas cap project, the first phase of it. And the latest news that we've published is that the technical bids are I suppose, due to be submitted by the end of this month. So there is a likelihood that that might be extended even further. But that's a major project estimated to be about $4 billion, give or take. I talked about the Saab field development. There is obviously the Shah gas plant expansion project as well, which is essentially an expansion of the Shah gas production, gas processing facility to increase its capacity to 1.85 billion cubic feet per day. So massive project again. There is a Bob gas project, again, another ADNOC gas project that is in the feed stage. ADNOC Gas has separately planned a fifth fractionation train to be added to its Ruwais natural gas to liquids project. And then, of course, there are the other offshore projects and Project Ramdan that I spoke about a little while earlier. Right, Qatar Energy. Now, I've spoken at length about the two phases of the North Field LNG expansion program, which is North Field East and North Field West. They are well and truly into execution. So, I mean, the North Field East is expected to be commissioned sometime around 2026. North Field North Field South will be commissioned expectedly around 2028. And those two phases put together will increase Qatar's LNG output capacity to 126 million tons a year. In February 2024, like I mentioned, Qatar Energy announced a third phase, progress on which remains a bit laggard. And obviously, it is our endeavor to keep on track of this project and bring to you news as and when there is credible information available. With regards to other projects that are happening in Qatar, there is the North Field Production Sustainability Project that I spoke about. There are two phases. Saipem has been exceedingly successful in both programs of the North Field Production Sustainability, or NFPS project. Just in the second NFPS phase, Saipem secured work worth a total of $8.5 billion. And with regards to the first phase, they are executing the entire span of EPC works for the first phase of the NFPS project. Away from the NFPS projects, there is a similar fifth NGL train that Qatar Energy intends to include in its main NGL production facility in Mesaid Industrial City. That project is also estimated to be somewhere about $2 to $2.5 billion. The latest news is that contractors, which include Larsen and Toubro from India, Samsung ENA, and Tecnimont, of course, there are other contractors as well. They are in the reckoning for this project, and they have submitted revised bids just a few days ago. So you could expect a contract award decision to be made by the end of September, if not earlier. And then obviously there is the Bul Hanine offshore field development. Qatar Energy, make no mistake, is still investing in a lot of oil production projects. So Bul Hanine happens to be one of them. There are about 2 to 3 EPC packages, and commercial bids have also been submitted. So again, you could see some spending in upstream oil production in Qatar in this quarter, or probably in the last quarter of the year. And that's again a snapshot of the different planned oil and gas projects in Qatar. The COMP5 project, like I mentioned, is the next expansion package of the North Field Production Sustainability Phase 2 project. Again, involves building of or EPC of giant gas compression complexes. I think there are 2 of them, each weighing about 30,000 tons. Similar, I mean, the scope of work is similar to the previous COMP4 package. And then, of course, another very interesting project in Qatar is the GAFCO 8 project. You may remember TAZIZ from Germany being awarded a contract. I think it was in either late 2022 or early 2023 for the 7th expansion phase of the Qatar Fertilizer Company expansion project. The GAFCO 8 project that you see on your chart right now is the further expansion of those facilities. I think the ambition is to add about 6.4 million tons a year fertilizer production to QatarEnergy's fertilizer production complex. A massive project again. The latest news that I just heard a few days ago is the main EPC contract, the main EPC tender might have been issued. So I will try and get you more information about that project as and when I'm able to. Right, Oman. Petroleum development, Oman, obviously the biggest oil and gas producer in the Sultanate, has been very active this year. And there's something quite unique that they are trying to do with the creation of a proposed pool of EPC contractors to work on its greenfield and brownfield projects related to its main concession of Block 6 in the Sultanate. Now, obviously, the idea is to split projects based on their value and their scope of work into two categories to be known as Wave 1 and Wave 2. And the proposed structure of this proposed pool of contractors is going to be similar to what Aramco has done with its long-term agreement pool of EPC service providers. In terms of projects, contractors have submitted commercial bids to PDO for a project to expand the Beiba gas station in Dhofar Governorate. The project is known as the Budua Northeast Beiba Integrated Project, and PDO intends to execute EPC and commission of units to produce additional volumes of sour gas from that facility. It's understood to be only two contractors bidding for this job, and that's NP and Larsen & Toubro. And additionally, PDO is in the process of shortlisting contractors to participate in a FEED to EPC competition for a project to build an integrated facility from the Budua and TAZIZ fields. The main aim of that project is to expand the capacity of the existing gas production and processing facility at TAZIZ. And PDO is also seeking to appraise, produce, and process sweet gas from the Budua field, which is at a distance of 50 kilometers from the TAZIZ field. This project, forgive me, has had a few start-stop moments ever since it was first announced in 2019, if I'm not wrong. And the latest sort of EPC, the execution model that PDO has adopted is that of a FEED to EPC competition, where it has invited contractors to shortlist for the engineering works, and based upon the design, as is typical of these models, is to ask those contractors, the selected engineering firms, to participate for the EPC works. And that follows a DBOOM model, a design, build, own, operate, and maintain tendering process that PDO adopted previously for this project and later cancelled in favor of the FEED to EPC competition. Apart from PDO, state-owned energy conglomerate ADNOC Group is the other major player in the Sultanate of Oman. And they have been also fairly active this year. Just in June, OQ Gas Networks, a subsidiary of OQ, awarded the main EPC contract worth about $272.75 million for a project to build a new gas transportation loop line between Fahud and Sohar. That project is called the Fahud-Sohar Loop Line Project. Essentially, is a 193-kilometer gas transmission loop line with a 42-inch diameter, and that contract was awarded to Egyptian contractor Petrojet. So congratulations to Petrojet for winning that project. I did tell you right towards discussing the projects on the execution chart that the Egyptian contractors, both NP and Petrojet, have been fairly successful over the last 18 months. Separately, I also spoke about Ruwais LNG making progress with the EPC tendering exercise for its plan to build a fourth LNG train at the Galhat LNG complex in Sur. That'll have a capacity of 3.8 million tons a year. Progress has been quite rapid throughout the last few months. The word on the grapevine is that the site visits have already been completed, and the shortlisting process for contractors is underway. Some of the contractors that have expressed interest are Chiyoda, again, a very successful and renowned contractor in the LNG domain, along with Samsung C&T from South Korea have expressed interest, along with JGC, McDermott, Saipem, Technip Energies, and Daewoo Engineering and Construction. What's more, obviously, this isn't the only LNG project taking place in Oman at the moment. You will know about the Masa LNG project, which is funded mainly by TotalEnergies of France, who have an 80% shareholding in that project. It's a $1.6 billion project for which the EPC contract was awarded last year. Masa LNG broke, obviously that EPC, might I add, the EPC work is being done by Technip Energies of France. The groundbreaking ceremony for the Masa LNG project took place in May, and that is expected to be, the EPC works are expected to be completed in 2028. Again, most of the projects I have already spoken about in this list of the top oil and gas projects in the pre-execution stages in the Sultanate. So I will give way and make progress with the rest of the presentation. But before that, there's just time for a quick poll question, if you will indulge me. And I would like to know what, according to you, is the biggest challenge when it comes to execution of projects in the MENA region? Do you think it's a shortage of skilled labor with the volume of projects that are coming online? Is it difficulty in procuring key equipment and items? Obviously, procurement is a major sticking point in the success of an EPC project. Or do you think it's the chronic issue of non-payment and contractual issues with clients? I'll take a short pause while you delve into this question. Right, I've got more than 180 responses, almost notching up to 200, that have trickled in. All I can see from the results is that about 40% of you believe that non-payment and contractual issues with clients remains quite a challenge. Of course, there's no denying that. There has been a problem, to put it mildly, throughout the history of the industry. Obviously, major progress towards improvements in contractual terms and respect to obligations have been achieved, but there is still some way to go to be able to achieve a perfect balance. Obviously, the next biggest factor, according to you, is a shortage of skilled labor, and that is going to be an issue, especially in short project execution cycles, and then followed by difficulty in procurement of key equipment and items. So thank you very much for your responses. And now let's continue to make progress with my presentation. Again, a gentle reminder about that WhatsApp channel I spoke about. It's very easy. You just need to go to WhatsApp and get this, look for the MEED channel, or you can scan the QR code that's on your screen right now to be able to become a member of this channel. Right, another major market in the GCC in the form of Kuwait, and Kuwait Petroleum Corporation, the owner of several subsidiaries in that country, which has not had a moment of rest in this year in particular. And it's quite surprising that it's been more than 1 year after the Kuwaiti Emir indefinitely dissolved parliament and suspended some of the country's constitutional articles. But oil project activity in the country has quite surprisingly gradually increased. In the 14-month period since the suspension of parliament, the total value of projects in the country has risen nearly by a third. And as of July this year, the active value of all projects, which includes obviously projects that are under construction, as well as planned projects, happened to be somewhere in the range of $18.5 billion. Quite a staggering number for a country whose parliament is in gridlock. While project activity is gradually increasing, it remains a long way from the peak that we saw in 2019. Obviously, the sort of standoff between Parliament and the decision-making bodies in agencies like Kuwait Petroleum Corporation and CAPT is having an effect, but nonetheless, there has been no let-off in activities. Obviously, it's far from the level that we saw in 2019, where $65 billion worth of projects were active in that year. Now, in terms of what we see is petrochemical industries company PIC, which is a subsidiary of KPC, has completed feasibility studies for a planned olefins plant in the country, which is known as Olefins 4, and that's estimated to be about $500 million. Another KPC subsidiary, KNPC, Kuwait National Petroleum Company, has issued a tender covering the development of 3 gas recovery units at the Mena Al Ahmadi refinery. And separately, KNPC is also in discussions with its parent entity to secure approval toward the main contract for a project to develop a new fuel depot in the Al Mutla area. It is understood that CCC have submitted the lowest bid of $1.16 billion for the contract. So it's quite a significant project that KNPC has undertaken. And obviously, Kuwait Oil Company, the upstream business of KPC, remains the busiest of all the KPC subsidiaries. And it currently is in the main contract tendering stage with 4 strategic oil projects worth a total of $1.57 billion, as well as separately an estimated $570 billion to develop Jurassic light oil export facilities and upgrade the existing export network. So KOC is essentially the busiest KPC subsidiary, followed by KNPC and obviously PIC with that Olefins 4 project. That's your list of the top 20 Kuwait oil, gas, and petrochemical projects. And we can see that key projects are gaining traction as KPC and its subsidiaries look to accelerate stalled projects and make progress with new ones. So there's your list of the top 20 planned projects in Kuwait. Bapco Energies. In Bahrain, obviously, they are in the middle of a restructuring process. Now, Bapco Energies, the state energy conglomerate, has about 12 subsidiaries, Bapco Energies, which was previously known as Noga Holding, announced a massive restructuring process back in May 2023, and it is expected that by the end of 2026, all existing Bapco Energy subsidiaries will be restructured into 7 businesses out of the 12 that currently exists. You can read in your leisure a bit more about what climate action and climate goals, the targets that Bapco Energies have published and how they plan to achieve them in the years to come through different projects. But the biggest project that Bahrain has seen in years is a $7 billion Bapco modernization program, which was commissioned in December of last year. I was very fortunate to be invited to the inauguration ceremony where the Bahraini king was in attendance. You can see the picture that is from that inauguration ceremony back in December. That project, the BMP project as it is called, is a central mega project of Bahrain's Vision 2030 economic development strategy and is crucial for Bapco Energies to boost long-term downstream oil potential. The core objective of the BMP is to upgrade that Jafurah refinery, which is Bahrain's only oil refining asset, and that was about 90 years old. Let's not forget that Bahrain is the first country in the GCC where oil was discovered. I think it was back in 1932, if that stands correct. Now, in February of 2018, EPC contracts were awarded for that EPC contracts worth $4.2 billion were awarded for the PMP program, and was essentially won by Technip, Technicas Reunidas, and Samsung E&A. And Technip also performed the FEED work on the project. Chevron acted as a consultant, while Australian engineering firm Worley was the project management consultant. It's a massive project. It has taken slightly longer than expected for Bahrain to commission the project, but it is now complete, with the final bits of the commissioning activity taking place throughout the year. Other than that, not much to speak about projects in Bahrain. Obviously, upstream, the upstream business of Bapco Energies, which is Bapco Upstream, continues to make progress with projects essentially to maintain that level of oil and gas production. They do come out with tenders every now and then. Obviously, project award activity also takes place, but nothing worth mentioning in the form of a project stable chart. However, in an interview with MEED, I think it was sometime around December. Oh, yes, it was during the inauguration ceremony where I had the chance to interview Mr. Mark Thomas, who was a former group CEO of Bapco Energies, who did happen to mention about this carbon capture project as a way for Bapco Energies to achieve those net zero goals, which I mentioned a few minutes back. Although there is no concrete project execution strategy in place for advancing this project, but Bapco Energies remains committed, according to him, to advance this project as and when there is the required level of project financing available and the determination to go ahead and start the tendering process for this project. This is essentially a financial transaction and not really a project contract that was awarded for the Saudi Bahrain oil pipeline. This took place, I think it was in September 2024, when Bapco Energy sold a stake in the Saudi Bahrain pipeline company, which is also known as the AB4 pipeline. That's the main pipeline that delivers crude oil produced by Saudi Aramco to the Jafurah refinery. And that was a major financial transaction in the fact that BlackRock from the US asset management company got involved in buying a stake in the pipeline. Right. The rising star, as I mentioned, Iraq, obviously blighted by war and geopolitical conflict. And while the political and security situation is still not viewed as stable, Iraq's oil and gas projects market has remained relatively stable in this decade, with the total volume of projects, that is projects under execution and different stages of planning, never dropping below $114 billion, according to data available on MEED projects. So the total volume of active projects in the market has never dropped under $114 billion. That's a phenomenal number for a country that has been ravaged by war and conflict over the last 20 years. In terms of projects, what we see that there are a lot of Asian companies, mainly Chinese, who are looking to invest further towards developing projects. We see China's Zhongmen Petroleum announced fairly recently that it will invest $480 million on 2 Iraqi fields, $264 million in the first phase of the Middle Furat oil field, and $217 million in the first phase of developing the East Baghdad field north extension. Apart from that, the Iraqi oil ministry, as recently as last week, announced signing a contract with SLB, under which SLB will drill wells at the Akas gas field, aiming to initially raise production to 100 million cubic feet a day. This agreement with SLB is part of a larger project for Iraq to develop a total of 400 million cubic feet of gas from the Akas field. Also in July, KBR won a major FEED contract for the development of an ammonia and urea production plant by KAR Electrical Power Production Trading, KEPPT. in Iraq. The facility will be developed in Basra and have the capacity to produce 2,300 metric tons a day of ammonia and 3,850 metric tons a day of urea. So major petrochemical project that is going to be developed in Iraq. Apart from that, the Iraqi Oil Ministry has also retendered contracts to develop 2 refineries which have a total estimated value of $5 billion. The Alkut Investment Refinery Project in Wasset Governorate and the Al Samawa Investment Refinery Project, which will have a capacity of 70,000 barrels a day. What I mean to say in a nutshell is that if companies that are pushing ahead with projects in Iraq continue to achieve milestones, they do continue to make projects that they have planned to invest in, the recent uptick, and I will remind you that the active volume of all projects in the oil, gas, and chemical sector stands at somewhere between $114 billion, $120 billion. That recent uptick may become the start of a more significant project boom, the one that Iraq has not seen in many, many years. So we are very optimistic about Iraq. The security situation continues to persist, but we just hope that better days are on their way. This is a list of your planned oil, gas, and petrochemical projects. I already mentioned some of those projects that are in that chart. Obviously, there is the strategic crude oil export pipeline between Iraq and Jordan, which are in the bid evaluation stages. The two of them put together are almost the 2 packages put together are almost $5.5 billion. And that's the pipeline is meant to be built in 2 sections. The first of them will be from Najaf to Aqaba in Jordan, and then the Haditha to Aqaba pipeline. So hopefully that project might see the light of day by the end of this year. Right. I've been asked by my marketing colleagues to make a mention of this. Obviously, I have spoken at length about MEED.com and MEED projects. You are quite familiar with what we do, who we are, and what our main body of work is. Obviously, I also spoke about the PIR report, which you can purchase using that coupon code, especially on the Mena Oil and Gas Projects Market Report for 2026. Apart from that, MEED's business spans many other segments. We do a lot of events around the calendar year, and obviously there are a whole host of marketing solutions that are available. Right, now let's take a quick look of the North African markets. The 2 main markets being Algeria and Morocco. What's happening in Algeria is that Algeria, might remind you, is a major member of the core group of 8 oil producers within the larger OPEC Plus alliance. The country is producing about 927,000 barrels a day of oil under its current output quota. In June, Algeria awarded 5 out of the 6 oil and gas exploration licenses it offered in an upstream licensing round in 2024. The companies that were awarded those blocks were TotalEnergies, QatarEnergy, ENI from Italy, and State Enterprise of Thailand, known as PTTEP. Sonatrach, which is the largest gas-producing company in Africa and the largest state enterprise in Algeria, then signed a production-sharing hydrocarbons contract estimated to be about $1.35 billion with Eni in July, as recently as this month, that is. Also in July, Sonatrach awarded an $855 million contract to China's Jafurah Group for a project to develop facilities at the Ruwais gas field. And the EPC works, Jafurah said, will be undertaken by its subsidiary Jafurah Oil and Gas Engineering. This project covers EPC of a natural gas booster station in the Ruwais gas field and upgrade and renovate of related transmission pipelines. What else is going on? Obviously, there is design work that has been completed and bids have been submitted for the main contract for the second phase of a project to develop the Hassi Bir Rekaiz onshore oil field. The project is being developed by Hassi Bir Rekaiz Group, which is a joint venture of Sonatrach and PTTEP. And also, more interestingly, some of you might remember that Sonatrach undertook this project, this package, which is part of the larger $8 billion worth of Skikda refinery expansion project. They've retendered, or they've rather received bids from contractors, including Petrofac, L&T, and Técnicas Reunidas in June for a specific hydrocracker package, which is part of that $8 billion project. And that package was retendered last year after its provisional $3.2 billion contract, which was awarded to L&T last year, was cancelled amid diplomatic tensions between Algeria and India. So it is quite surprising as well as welcoming at the same time that Larsen & Toubro has been invited again to bid for this $3.2 billion hydrocracker package. The list of planned projects is now on your screen from Algeria. And like I mentioned, project activity in Algeria's energy sector is growing as the country focuses on a strategy that hinges on the exploitation of natural resources. So some of those projects which didn't have as much as financial appeal and bankability in previous years are now seeing a lot of progress. And there is the list for you to consider. And finally, Morocco, which I said is another major market in the Maghreb region. And oil and gas companies continue to push ahead with exploration and production projects in Morocco, despite having found little in terms of confirmed reserves. Even with decades of drilling and hundreds of exploratory wells, the country has only about 40 billion cubic meters of pre-production natural gas, which is quite meager in comparison to some of Morocco's neighbors like Algeria and Tunisia, and some of the other African markets like Nigeria as well. However, London-listed SDX Energy has by far been the most successful oil and gas company in Morocco and was the only independent player to produce considerable quantities of hydrocarbon this decade. I spoke at length about the Nigeria-Morocco gas pipeline project. It's almost a 7,000-kilometer pipeline that will traverse across 16 countries and deliver 15 to 30 billion cubic meters of Nigerian gas to consumers along those 16 countries, reaching Morocco. And eventually, the ambition is to transport that gas onto the European Union markets. UK-based engineering consultant, we've heard, but Penspen is performing a feasibility study update to this project, which they are expected to complete by the end of the year. And separately, the Ministry of Energy Transition and Sustainable Development has issued an invitation for expression of interest in a major LNG infrastructure project. Morocco is situated at a very geopolitically a vantage point, if you like, for LNG infrastructure, in that can cater to both the the African and the European markets. And therefore, quite rightly, the Moroccan government is considering investment in an LNG import terminal, pipeline, and a gas power station, all integrated into one facility. That project is going to be located at Morocco's Nador West Mediterranean port and will include a gas power station with a capacity of 1,200 megawatts. The project will also include a pipeline network that will supply industrial consumers in Nador, Kenitra, and Mohammedia. And then obviously there is the conventional LNG terminal portion of the project. Right, with that being said, this is the list of the top oil, gas, and petrochemical projects in the planning stages in Morocco, most of which I have already described to you. And just before I wind up, here is a gentle reminder about that the special report on the MENA oil and gas market for 2025 and 2026 that has recently been published. And you can use that coupon discount code by scanning the QR code on your screen to avail of that $600 discount. And with that, I would like to thank you very much for attending today's webinar. You have been an incredibly patient audience. I know I have overrun my allotted time, but there was just so much to cover. And I do acknowledge that there is much more that I may have missed out. especially in things like ADNOC onshore projects, where remains a very busy sector in Abu Dhabi, and so much more that I wish I could have covered. But here are my contact details. Nonetheless, I apologize. I do not have the luxury of time to take on the questions that I've dropped in my Q&A box, but I will make it a point to individually respond to all those questions that have landed, and hope to be in touch with you. Here are my contact details. Like I mentioned, some of you might know me already, but it'll be my pleasure to be in touch with each and every one of you who attended today's live webinar. Thank you very much, and hope you have a very productive and successful remainder of 2025, and do even better in the next year. Thank you.